Hey guys, welcome back to the channel. Today we're gonna break down how to find valid order blocks step by step. By the end of this video you will know to avoid fake order blocks, where to place your stop loss correctly, and how to catch those sniper entries that actually move in your favor. Make sure to stick around till the end. I will show you some live examples of me taking a trade using this exact method. Let's start. I've here drawn two types of order blocks, one that works and one that doesn't work. Pause the video and find out which one is the good one. It's not that difficult. As you see, the left one is the good order block. It's also standing here, good order block, and this is the order block that is bad. I will tell you why this order block is good. Guys, this is a perfect example of a valid order block with the trade I took. I took 5 risk reward and 5% trade. It was a beautiful trade on the GBP. I will show you guys why this order block is valid. Two things that is important for a valid order block. After the order block is formed, you have to see a move that's 2 times your order block. So I will show you guys 1 second. Alright, I know. This is order block is 11 pips and the move after order block is more than 22 pips. So this order block is valid and this order block has not been mitigated. If this candle wick hit the order block before going up, the order block has a little less probability to be a good order block to place your trades. But the order block has never been mitigated. It looks like it, but it has never. Even you had here a breaker block also. But when price came back to the order block, it created another one and made an extreme fast impulsive move up to take out Asia high and take out other liquidities on the higher time frame. I will talk about that later also. If the move was like this, something like this, and we had like this, and we came back to the order block right here, we wicked it inside because you see the wick right here, it never touched it, then the order block would be less high probable because we already mitigated it. But it did never, and after that we made a beautiful move up. Even here, this order block looks valid. It is also valid because if you draw it from here to there, this order block, let me draw it for you guys, block plus, and if you want to calculate the pips, it's important to calculate how many pips is, yeah, that's something important because otherwise you don't know. Wait a second. The move is 6 pips and from this move to up 6.8. You see it's more than 12 pips, and this wasn't just a beautiful order block. Beautiful because it was just one candle on the 15-minute chart and we made a big impulsive move. After that red folder came, we made another impulsive move, and then the time from the market was a little bit slow because New York was going to close and preparing for the next day. Price even came back to order block, hit it, and just hit it one time and just made a little consolidation because price was not optimal. It was London, not New York, and after that we still made the impulsive move. Is this a valid order block? You can look at it. Yes, it's a valid order block because the move after it is 2 times the order block itself. And if you want to calculate the move, you have, or how many times the order block, you have to watch also the wicks. Don't only count the body, but also the wicks. That's important. As order block has not been mitigated, we can see if it works, if it did work, the order block. 1 second, I'm on replay mode. Give me a second to watch this. Oh. No, it did not mitigate it. Because why? Because price already did something else important. If you know the market maker model, we had initial consolidation, first leg, second leg, higher time for PRA, and took out initial consolidation. After that, the trend will switch. I didn't know that, I didn't saw that, but it will happen. So what also important is about order blocks, what I'm going to teach you, is you have to know where you're in the market. If you're in a reversal in the market and you see a bullish order block, but the trend reversed to bearish, yeah, it's a big chance it doesn't work, and we'll mitigate it to a mitigation block or a breaker block, because this block worked as a mitigation block right here. It hit it and just went down. As you see. So you have to know where in the market you're at. It's not only if the order block is valid or not. You have to also see where you're at in the market. Let me show you also a not valid order block. Not valid in the drawings I made. It's really easy why this one is valid and why this one not. If you look at the pips or look at the body, you have always to count, oh, it looks a little bit weird, I will show you like this. You have also to count the wick with it, and the wick was here and the move just made it out of the wick. So this order block is not valid. It has to be 2 times to be valid. And most times if you see order blocks like that and you know that price goes up, it's a big chance that it will stop loss you, because it will go to another PD array before going to your initial point of interest. And the reason why this one is valid, as I said, it's 2 times the size of the move. And it is also something important with order block you have to know. An order block is in reality just a candle, the previous candle before a impulsive move. That's the only thing you really also need to know. It's the previous closing candle before our impulsive move. It has to be opposite to the move you want to see, and it has to be the previous candle before the impulsive move. And that is a valid order block. It has to be 2 times, it has to be the previous opposite candle before the impulsive move. That's our important stuff about order blocks. And what time frame you can use order blocks also important. You have a few time frames. For the daily chart, you can use for the PD array as order block for 4 hour time frame. So if you're looking at the 1 day chart, you can use the 4 hour time frame as your order blocks. For the 4 hour, the 1 hour time frame. For the 1 hour, 15 minutes. And if you look at a really low time for the 15 minutes, you can use 1 minute till 5 minutes. It has to be how you like. I have backtest this, I have collect data about this, and this is how I really like to use order blocks on these time frames. And like, we can go to the daily chart if you give me a second. If you look at the 4 hour time frame, you had here also a mitigation order block on the 4 hour. It hit, went down, but yeah, this is the 4 hour. If you look at the 1 hour, let me see where it was at. Oh, somewhere around this. You would probably have a beautiful RR trade, liquidity swap, took out the order block and went down. And it was a little bit late, but this is also showing about the order block. The time frames are really important to align, and that's all about order blocks you need to know. The important stuff you need to know. If you're a beginner, this is a beautiful video about you. If you're new, also. If you don't want to miss content like this, please join the link in my bio. We have a free Discord. We discuss trades, do educational stuff and other stuff. This is my first video on a series about 25 videos I'm going to do about price action. The videos will get better and better, believe me. I will see you guys soon, and please follow and subscribe.